All right, guys, I want to point something out to you here on this is the soybeans, and this is using the time and price template on the soybeans. Now, the soybeans in the overnight session and the post market, so on and so forth, is relatively illiquid. So because of that, because you really don't get the good liquidity in the beans until the regular trading session, it uses a different type of time and price template. And this is based on the premise of activity. So what I want you to notice here is what I have written up here. The soybeans use a different type of time and price format because of the lower liquidity. And what you are looking for here is, first of all, you'll notice that the time windows, which are these dotted lines, are a lot shorter than are for the ES or crude or T-bonds or the Bund or any number of highly liquid trading vehicle. But one of the things that you can do with the time and price template, and it's very selective because you might only get maybe 3 to 5 setups per week, but typically they're very powerful. And I want you to notice here where this yellow line is, right? And right below it is a pink line. And that's confluence. That's two sets of time and price coming together at the same time. Now, you see this in the ES, and you see it in crude, and you see it in a lot of the other markets. But what I am going to tell you is that in the beans and in less liquid markets, when you see these, they have a lot more impact on price than they would in other liquid markets. And it only makes sense, right? I mean, if you have a liquid market, does it take more buying and selling in order to move it? Absolutely. So the reason or the premise behind the fact that these setups have a larger impact on price in beans is from a liquidity standpoint. So I've drawn these blue arrows here showing you where these two sets of time and price bands are basically set on top of each other. And so, as we all know, observation is king. And when we see that, we know that this is going to be an area, right? Or a time zone for that matter, that we need to pay attention to. And sure enough, we tested it 3 times, couldn't break it. We finally broke it, right? Then we came down below it by a tick, came back above it, and then we slammed down below it. So that right there is your trigger. You know that this has been violated, and it is a major violation. So you know that you're going to get some type of decline. Now, I can't say that I knew that we were going to get this large of a decline, but it is, once again, something that you just need to pay attention to. And you can see through the course of the rest of the day, we don't have this setup where we have two lines laying on top of each other anywhere. We've got this little squeeze here, which wasn't too bad. I mean, that gave us a spike lower. And we've got this little squeeze right here. But other than that, down here you would have had a squeeze, but we never got there. Over here you would have had a squeeze, but we never got there either. So when you see these laying on top of each other, especially in a market that is of lower liquidity than are some of the larger markets, you are going to get a larger move in one direction or the other. In this situation, it broke lower. Now, if we had been coming up to it, right, and broke through it, that would have been a trigger to the long side. But in this situation, we were coming down to it, and we got a move lower. Now, you can see these time and price bands work. I mean, the magenta right here nailed that high, right, nailed this high. But what you really want to look for in lower liquidity markets is this type of thing, where you have two sets of time and price. Actually, it's the the firm basis is that you have two large time windows that are laid on top of each other. So, as I told you in the past, time is the most important thing. It's not price. Time. That is the most important element in any market. So when you have one laying on top of another, then you know with a pretty high degree of certainty that something is going to happen there. So anyway, that's all I really wanted to touch on this. And I'll go over the beans on the footprint, maybe make a video. But there's all different ways that you can use these time and price levels and these time and price windows. So that's it. Hope you guys are having a good weekend. Later.